Of our discussion, what is Fannie Mae?
Fannie Mae is a mortgage finance company. They purchase mortgages and they do something called securitized mortgages where they'll guarantee payment on the mortgage and then sell it off to another investor. That's called a mortgage-backed security. It's one of the largest financial institutions in the country.
How many people have mortgages under this organization, and who does it affect?
It's not, I don't know the exact number of how many people, but Fannie Mae and Freddie Mac, which is its competitor in this market, collectively own or guarantee half of the $7.9 trillion U.S. residential mortgage market. They're very large.
Is this a government agency?
No, it's quasi-governmental. It was chartered by Congress, it is called a government-sponsored enterprise, or GSE. So it has special benefits like a government agency, but it's not. It's a private corporation. It's owned by shareholders. It makes a lot of money, but it doesn't pay local or state income taxes. It doesn't pay fees on its securities. And there's other benefits that are conveyed. The implicit federal subsidy is what it's called, where Wall Street assumes, because it's a GSE, that Congress will pay back debt holders if they go bankrupt, and that is their biggest benefit because that conveys a lot of money on Wall Street. They've
been in the news a lot this week. What happened and why have they been in the news?
They have been in the news because the Securities and Exchange Commission actually sided with its regulator, saying that Fannie Mae had some funny accounting and didn't like its numbers and is forcing it to restate its earnings back through at least 2001.
To the tune of how much?
Well, the company has estimates, but you have to understand those are company estimates. Those aren't estimates from regulators. The company said that the before taxes loss would be collectively, cumulatively, $13.5 billion. After taxes, it's $9 billion. But one thing I feel that readers and consumers and investors don't realize is that's just to correct two areas. That's just two areas of accounting, derivatives and another area. If they had to re-audit their entire books, who knows what size the correction might be.
Will they be forced to do that, to re-audit other aspects of the books?
That's a question. I've been asking regulators that. I would think they would have to. I don't see any way they could get out of it. Once you start correcting one area, you're going to find errors in other areas. And if the board of directors, I'm sure at their meeting tomorrow, one of the things they might contemplate, I don't know this for certain, it would be logical to assume they might contemplate a complete re-audit.
So when we're talking about questions about accounting, is this on the scale of what happened at Enron and Global Crossing and those type of companies?
It's different. It's not a Ken Lay, Jeff Skilling thing. Fannie Mae has real mortgages with real assets. Enron didn't in some regards. How they were booking income, though, might have some parallels. How they, might have documented some things might have some parallels, but I don't think it's anything on the scale of Enron.
How were they booking their incomes, and what kind of things were they doing that caused concern for those auditing the books?
Well, there's one of the aspects, the major source of the income difference is around their derivatives. Derivatives are complicated financial instruments. They're things that companies use to hedge risk. And one of the things they did was taking the so-called shortcut method, where they basically have a risk, they have a bond that they have out that pays like 6%, something like that, and then to hedge that risk in case interest rates rise, they will go and do a derivative at the same amount, to someone else where they're getting that money instead of paying it out. Okay, now what was happening is interest rates were staying low or moving. Fannie Mae was assuming that these two hedges, called hedge accounting, were identical and taking the shortcut and not keeping records on it and not adjusting for fair value. What their regulator, OFEO, and the SEC said is that they weren't allowed to do that, that they weren't in fact perfect hedges, and they have to unwind that accounting and do a much more cumbersome accounting method, which will show real losses and gains.
We're going to talk about the investigation of Fannie Mae for the remainder of our time with Don Kopecky of the Dow Jones Newswires. You can call in 202-628-0205 if you support President Bush. 202-737-0002 if you support Democrats. If you support others, 202-628-0184. If you wish to email your questions, it's journal@cspan.org. There's a gentleman named Franklin Raines. Who is he in regards to this company?
Franklin Raines is the chief executive officer, and he's brilliant. He is a Harvard, I forget if he got his undergrad or grad, but he was a Rhodes Scholar. He is extremely well regarded. He was the former budget director under Clinton, and he's been at Fannie Mae for several years. He took over as CEO in 1999. He was vice chairman, and he rose through the ranks, I think, in the early 90s until the mid-90s before he became CBO director. He's the CEO, and he's in a lot of trouble right now.
Is he the one directly responsible for these accounting errors?
He says no. He testified before Congress in October, and he kept qualifying his statements where he said, I relied on the opinions of others who were experts in this. We relied on our auditors, KPMG. We relied on the opinions of our CFO. But he did at the same time said that if the SEC ruled against him, he would take responsibility.
We'll ask you more questions, but we'll get some calls from our viewers. Cleveland, Ohio, you are up first. Good morning. Go ahead.
Yes, ma'am. During the stock market bubble, I guess I come up with $6 to $8 to $10 trillion worth of wealth that really didn't exist from top to bottom. After the stock market bubble, we started manipulating our interest rates. We got them, especially the mortgages. And what seems to have happened in the past, since the bubble is people run up $10,000 on their credit cards, and then they get equity loans. And then they turn around and they pay off their credit cards, and they have a whole nother $10,000. Now what seems to be happening is Fannie Mae is backing these loans, who are backed by reinsurers, who are then backed by the derivative market. So what you have is the same thing you had in Enron. You're giving a guy $10,000 because you're saying his house is now worth $10,000 more than it once was. Who's to say? And then he is bearing all this credit card debt. And like I say, with the way that you're talking about hedge funds, the way the derivative market works, it seems that $10 million or that $10,000 ends up in that derivative market. So you're just building another bucket.
We'll stop you there and let our guest respond.
Well, I'm not so certain that the derivatives, I mean, the derivatives, everything's tied to the value of home prices. And I think what you're trying to ask about is home bubble, and whether or not when Fannie Mae insures mortgages based on, huge values, run-up values in home prices, how dangerous that is to the overall financial services sector. And I've covered housing for a couple of years now, and there seems to be regional markets where the home prices are really hot. And I'm one of those homeowners. I'm taking equity out to redo my kitchen, and I am thankful that my house is appreciated by double since I bought it 4 years ago. It's crazy. I think it would be crazy for someone to pay what they say my house is worth to live here in D.C., but at the same time, what you have in markets like D.C. and California and Nevada, you've got limited space to build, you've got limited supply. The U.S. population keeps growing, immigration keeps coming here, and you've got more people with limited space. And what's happening is homes that were maybe valued at $110,000 5 or 6 years ago might be worth $200,000 this year because their location doesn't change. That's a very finite thing. And so as far as the stock or the housing bubble goes, I think there are regional, areas where it's really taken off, but locally, it just depends. I don't think it's a big, huge Enron-esque, risk. At some point, home prices have to keep pace with incomes. But what you're having in areas like Washington D.C. and New York is you're having a lot of the very wealthy people come in and drive up those prices.
New York City. Good morning. New York City.
Hello.
Hi, go ahead.
Yes, good morning, Ms. Kopecki. How are you?
Good.
Good. I just wanted to sort of lay something out and maybe just have you comment on it. There are a couple of mortgage servicing companies, Fairbanks Capital, Ocwen Financial, specifically, who have been investigated and charged with certain allegations by the Federal Trade Commission and the Office of Thrift Supervision.
Yes.
There seems to be some connection between mortgage servicing fraud, excuse me, mortgage servicing fraud and mortgage-backed securities.
Yeah.
And I'm just wondering if you've heard anything, about this.
Well, I'm not certain of Fannie's connection with Fairbanks. I know that Fairbanks was a servicer for I believe for Fannie and Freddie. I'm not certain though. I just did a story about Fannie and one of its mortgage servicers in North Carolina called First Beneficial. And the owners of First Beneficial are in jail for 21 years for mortgage fraud. And in that case, that was something where there were servicing issues. The owners weren't escrowing properly for consumers. But it was bigger than that. They were just making up loans. They were making up properties, things like that. And in that case, federal investigators are looking at Fannie Mae also in that case, because what the company did was when they discovered the fraud, instead of informing law enforcement agencies, they told the company, you need to buy these back, you need to find another buyer. And they did, and it was Ginnie Mae, which is a government agency. And Ginnie Mae lost a lot of money. And so where the GSEs are concerned with mortgage fraud, with Fannie Mae, it seems they were mostly concerned with getting their money back when they detected it, not necessarily stopping it.
So Fannie Mae, when they buy mortgages, is this for everyone, or is it a certain amount of mortgages they buy?
They buy for everyone. What do
Well,
you...
if I were a homeowner, I was looking for a mortgage, do I go directly to Fannie Mae over than going to my regular bank or lending industry?
No. Fannie Mae and Freddie Mac they're explicitly prohibited from dealing directly with consumers. So what they do is they'll use companies like Countrywide, Cendant, Bank of America, and they will buy the loans from Bank of America is a bank. And when they lend out money, they've got to keep capital on their books to hedge against, in case the borrowers default. So what Fannie does is they'll buy those mortgages, they'll assume that risk. And then that allows Bank of America to go out and make more money. They were created to provide liquidity to the mortgage markets so that banks were able to then go out and lend more money.
Merritt Island, Florida. Good morning, you're on with Don Kopecki.
Let me tell you what I think is going on. Frank Baker, a Republican, has been trying to get rid of Fannie Mae from day one. Now, this is a put-up deal. I want to hear from Frank Raines. He's honorable. It's a good company. I've been in real estate for 30 years. The banks want Fannie Mae and Freddie Mac.
Did the National Association of Realtors ask you to call?
What?
Did the National Association of Realtors ask you to call? I'm just curious.
My God, no. I think for myself. Lord have mercy. I don't pay any attention to the National Association of Realtors.
Okay.
All right? But this is ridiculous. They're going to ruin a very good thing so those greedy Republicans can get this in the hands of the greedy bankers. Honey, you probably don't even realize this.
I'm not sure that was a question.
But explain the reason why she says that banks want Fannie Mae to go away.
There are some... It's complicated. There are some banks that depend wholeheartedly on Fannie Mae and Freddie Mac doing business with them. And then there are other banks that are very large, like Wells Fargo and other banks like that, JP Morgan, that want to get into the business and compete against Fannie and Freddie. The companies have advantages that other banks don't have. They don't have to hold as much capital. They don't have to pay taxes. The other benefits I talked about earlier, their costs of borrowing on Wall Street are significantly lower than that for, say, a Merrill Lynch, JP Morgan, those kinds of banks. Well, Merrill's not a bank, but I mean, they think it's an unfair playing field and they have an unfair advantage. And Republicans, by and large, don't like large government-sponsored programs anyway, and they're more about free trade, free markets, those kinds of things, and that's why the Republicans aren't happy with Fannie, it's also because of the operations. If Fannie Mae didn't have these questions about its accounting, if it didn't have questions about other issues, if it wasn't so entrenched in lobbying, I don't think the Republicans would care half as much.
So how does Capitol Hill view what's going on with Fannie Mae now?
It's mixed. It's mixed because, I mean, there's mostly upset. They're losing a lot of allies, but Fannie Mae is a huge, huge supporter of a lot of lawmakers on the Hill. Bob Ney, you know, Maxine Waters, the entire Congressional Black Caucus, Barney Frank.
You mean donations to PACs and things like that?
Yeah. Kit Bond, who's a Republican. It's not just Democrats that they support. They support Democrats and Republicans, and they've got allies on both sides. They're masterful at lobbying, and you know, but their friends are dwindling, and the support that they used to get is not as vigorous as it used to be.
Will we see a change in if this agency still remains under the auspices of the government, and if there's going to be a change in who oversees it?
I think that's a very real possibility. They came sort of close to getting it done last year, but then again, it's Fannie Mae, and you can't underestimate them. They were very close in the Senate to getting a bill that they thought could get through the Senate when Fannie Mae got Senator Bennett, whose son runs the partnership office for Fannie Mae in Utah, to sponsor an amendment that effectively killed the bill.
Our guest before her current job was a business reporter for the Washington Times, also worked for the Aspen Daily News and Kiplinger's Personal Finance magazine. She has her BA in journalism from Pennsylvania State University, New York City. Good morning.
Good morning. I think this is mainly a drive by the private banks to get all the mortgage business. Do we have really equal justice under the law when all the banks who settled with our Justice Department and paid huge penalties, none of the leaders had to give back their pay or you know, the shareholders paid for them, and nothing happened to the big bankers. Now they are after Fannie Mae and the leaders, and they want Reins to pay back his pay or whatever. So do we have equal justice for the commercial banks and publicly supported organization that's doing good for the poor people?
Don Kopecki.
The only parallel I can find is in the Freddie Mac examination, there were some bankers that helped Freddie Mac perpetrate, you know, what is many believe to be securities fraud during their restatement. And I am certain that OFEO and the SEC will also be looking at the role that Fannie's commercial mortgage bankers played in its securities issues.
OFEO.
OFEO, the Office of Federal Housing Enterprise Oversight, not Ophelia or Othello, as some lawmakers have pronounced it on the Hill.
She said that they were trying to get Franklin Reins to give back his salary?
Under Sarbanes-Oxley, if securities fraud is found and the profits that his bonuses were based on earlier weren't indeed real, he's got to disgorge those profits.
And she was from New York City. How does Wall Street look at what's going on?
Wall Street is pretty apathetic about what's going on, which is surprising, but Fannie Mae and Fannie, I think Fannie in and of itself, don't quote me on this, is the third largest debt issuer in the world, behind the U.S. government and I think Japanese government. Fannie Mae gives a lot of business to Wall Street. Fannie Mae's, selling the stock generates a lot of commissions for the equity side, and the analysts have been incredibly disappointing to talk to about this. It's almost like they don't even read the financials sometimes because they've got that implicit backing. I called one analyst after the Freddie Mac restatement came out and asked her about the manufactured housing losses, and this was after she put her research note out, and she said, "What losses? They didn't have any." I had to tell her, I said, "It's on page 32. Did you read it? Did you not read it before you put your research note out?" A lot of analysts just believe that the implicit backing is going to be there. One of the rating agencies even said, after Congress was considering legislation that would remove their federal subsidies, they said, well, now we're going to have to look at their financials if they're going to remove their subsidies. So.
Jacksonville, Florida.
Good morning.
Good morning.
I work for a very large bank here. I've worked for another one, WAMU. I'm an underwriter, and I enjoy the mortgage industry. And, of course, a majority of our business is based on Freddie and Fannie. And I would hate to see a bad investigation. But if the problem is the derivatives, why are the derivatives allowed? Why not make a rule and regulation that prevents them from investing in the derivatives and having a hedge account? There's other ways to hedge. You know, my background is in accounting. There's other hedging ways that they could use. So why not just get rid of the whole derivative process?
I hadn't thought of that. I don't think anyone on Wall Street had really thought of that either. Derivatives, you know, other than Orange County and a couple areas, as long as they're not used to speculate and make profits, they're generally regarded as very safe, sound business practices. And it's not necessarily that Fannie didn't use its derivatives correctly, although I believe they were on the wrong side of a lot of hedges, you know, just looking at the numbers that they've put out themselves. It's not that they were speculating, they just kind of guessed wrong. Their losses could have been much, much bigger had they not had derivatives. And you know, it was more an issue of how they booked their derivatives. Because FAS is very complicated, and it allows all sorts of funny things if you're inclined to do those things.
Was there ever a chance of Fannie becoming like the savings and loan of years ago, where it would become insolvent, and what would happen as far as the taxpayer is concerned if that were to take place?
Well, the issue with Fannie that I think might be upon it, if Wall Street loses confidence in Fannie Mae, you could have a liquidity crisis which would prevent Fannie from being able to refinance its debt, because it's got to refinance its debt every couple of months right now. A lot of Wall Street doesn't want to be exposed to their long-term debt in case they fold or in case they lose their government backing. And if Wall Street does lose confidence in Fannie Mae, you could have some sort of situation where if they went out of business, what you would have, or if they were in a financial crisis, the banks that rely on them for business would possibly be in a financial crisis, and then you could have a ripple effect. No one believes that's going to happen, but it's not an impossibility.
So the average person sitting at home right now listening to this, why should they be concerned about Fannie Mae and what's going on currently?
Well, they should be concerned if there is a larger liquidity crisis. It could have you know, huge implications to the U.S. economy. The average homeowner should be concerned because Fannie Mae and Freddie Mac do make getting mortgages easier. They lower interest rates, not by a whole lot, by about 1/4 percentage point, but it's still something. It's better than nothing. And if their liquidity shrinks, if they're not able to get money off of Wall Street, then the banks that homeowners go to take money out won't have as much money to lend out themselves.
Vineland, New Jersey, good morning.
Yeah, I just have a comment. I'm a mortgage banker, and I've worked for a bank. And Fannie Mae and Freddie Mac is one of the most wonderful companies around. And I think that the government should use their money and resources in other directions. They, you know, have a blind eye to your color, your race, or anything, and it would be terrible if the people in the United States would all have to go to banks. Thank you for letting me have this comment.
If banks don't get the avenue of selling off some of their debt to Fannie Mae, then where do they go? And I guess is that the overriding principle of why they're concerned about this situation?
Yeah, the Federal Reserve and FDIC and other large bank regulators seem to think that when Fannie and Freddie were created, Fannie was created during the Great Depression and Freddie in 1972, there was a need for this liquidity. But now you've got lots of banks, lots of large private banks that they believe are more than capable at handling the needs of consumers. It wouldn't happen if you ended it tomorrow, but over time they feel they could transition it pretty safely.
Last call for you is from Pequot, Pennsylvania.
Good morning.
Good morning.
My problem is that I'm a victim of debt ratio. And because Fannie Mae is a closed circle, I can't, and I'm an entrepreneur, I can't show income tax that equals their requirements. And this is a trump card that they have. And I know lots of one-man shows out there who aren't able to borrow money. I haven't been able to borrow money for 17 years because I can't get out of debt ratio. I basically have to live on investments.
I mean, your debt to income ratio is too high for a bank to qualify you for the loans you need for your business?
Right, even though I have great credit and I have great, what's the word I'm looking for? I have lots of things I can sell
Assets.
that would get me money. But those two things don't mean anything.
Well, that's a concern from a lot of bankers, is that Fannie Mae and Freddie Mac, although they have streamlined the mortgage process, that it's a duopoly instead of since it's two, it's duopoly, and that the guidelines they set aren't as flexible as they need to be or should be for consumers, and they view that, and the Bush administration views that as unhealthy market competition.
What's the next chapter in this story?
Next chapter is the Board of Directors meeting tomorrow. It's anticipated that they are going to debate whether or not to terminate Frank Raines and Tim Howard. The question then comes, if they are, whether or not they terminate them for cause, which means they lose a lot of their severance pay, or whether or not they terminate them and allow them to keep their severance pay. That's going to be the next immediate chapter, and then the one after that would probably be either an entire re-audit or the Rudman report. The Board of Directors hired an outside law firm, former Senator Rudman, to do its own investigation of Fannie's accounting. And I think that's due out in a couple of months. I'm not sure on the timing.
Is there criminal implications for Mr. Raines as far as this process or this story is concerned?
Well, there were criminal prosecutors with the SEC when they met to tell them what was going on, and the DOJ is investigating it. You know, a lot of the attorneys I've spoken with said that if everything that OFEO said was accurate, if everything the SEC is saying it's accurate, they've got possibly obstruction of justice, possibly, you know, false and misleading statements, securities fraud disclosure issues, those kinds of potential criminal charges. But nothing has been charged. I don't know or believe that there's a grand jury investigation currently, but criminal prosecutors are working with the SEC on this.
Don Kopecki, thanks for your time this morning.
Thank you.